Thank you for joining Market News with Rodney Lake. This is a regular program for the GW Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GW Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. This is episode 10. I'm your host, Rodney Lake. Let's get started. Today, what are we going to talk about? We're going to talk about Apple. I'm sure you probably heard about this company. It's the second largest holding at the GW Investment Institute, and I thought it was a good time to start talking about Apple because somebody that you might know, Warren Buffett, sold a 50+% stake from Berkshire Hathaway in Apple. Should we be concerned? So maybe time to revisit, and certainly our students in the fall semester, we're going to be asking them to look at Apple and really understand what's going on. But let's do a little bit of an overview today using our framework, business, management, price valuation, and balance sheet. So let's start talking about Apple. So let's kick it off. The business of Apple. What is it? I think most of you probably know a big part of it, which is the phone. Many of you probably have an iPhone, right? And so that is a critical part of their business. And that is a platform for so many other things. There's 1 billion phones installed throughout the world. So that's a really big platform that for them to push other products on, and we'll talk a little bit about that, but that's sort of the basis of what they're doing. But they have other services. They certainly have the Mac, which is a very popular laptop, and other, iPads and wearables and other things. And so those are all important parts of the business, but really the iPhone is the centerpiece of the business, and all those things sort of are in orbit around that business. So first, let's maybe think about, what are some of the reasons why Berkshire might sell such a big stake? Well, it's an enormous stake in their portfolio in any case. And maybe they thought, okay, it's time to take some profits around that. And Buffett has mentioned something about that before, that with, tax rates possibly going up, that maybe it's time to take some profits around that. Maybe that's not the only reason. Maybe they're concerned about the business. Certainly the outlook for Apple's business doesn't look quite as rosy as it has in the past. And maybe Buffett is concerned about that. Maybe he thinks the valuation's a little too high, and we'll talk a little bit about that. And maybe he just wants to redirect some of that cash and put it somewhere else where he thinks that the return on invested capital, despite the big taxable gain on that position, is worth it. So we don't know that. Buffett doesn't talk about that. But what we can see is December 23 filing and the June 24 filing for Berkshire Hathaway is that the reduction in Apple is approximately 55% at Berkshire. Now, it still remains their largest equity position, so it's still a very important position. They certainly didn't sell their entire position. That would definitely be a different story. But what can we glean from that? Hard to know exactly without speaking to Buffett directly. Buffett, if you'd like to talk to us, please reach out and talk to us and let us know what you're thinking. Maybe he won't do that. But in any case, let's then go through the framework and see, is there something that we can understand? Maybe this is a good time, because Buffett did such a dramatic move, that we should better understand our position in Apple. It's our second largest position. It's one of the first positions. It's actually one of the very first positions that remains in the portfolio for the first fund, the Ramsey Student Investment Fund, back in 2005. Now, if you're playing along at home, if you bought Apple in 2005 for the Ramsey Student Investment Fund, that's over a 100x return. Not too bad. But we own the company today. What does it mean to own the company today? Let's go through it. So let's go first through the business. Well, let's look at some of the stats. So if we look at stats, and I'm going to refer to my laptop in this episode, a little bit different than in the past, but I'm changing it up here a little bit for the format. So revenues, right? What are the revenues for Apple in this last period? So you're talking about revenues of $385 billion. So that is a significant revenue number. So it's really hard to grow revenue when the revenue is that high. So that's the last 12 months through June, they're filing. So it's very challenging. Now, they grew that a little bit, but it's not a dramatic increase year over year, but it is an increase, but not a dramatic increase. And many people are expecting that number will fall. What's the installed base in the US? How quickly are those things turning over? You saw some drop in the demand in China, and people were concerned about, okay, well, the Chinese government restricting people from using iPhones for official government business. That's maybe putting a dent in demand there, and possibly people switching to other products that are lower cost in China that are widely available and are probably, in some cases comparable with some functionality, but certainly don't have all of the functionality that an iPhone has. But people are concerned about that. One of the other growth markets that people talk about is India on the business side. Now, the price points in India typically are much lower than the iPhone. So people are concerned about what is the real growth from India? What can it be? Because the market's a little bit different and the price points are a little bit different in India than they certainly are in the US or even in China. So people have their concerns about that. Now, even with all that said, just the law of large numbers makes it difficult to continue to grow this number when you have 1 billion phones installed against a $7+ billion person population, in the world. And so how many iPhones is everyone going to have? Well, some people do have 2 phones and maybe 3 sometimes. But really, is that going to grow? So now you talk about the refresh cycle. And I think that's the impetus for the iPhone 16. And you talk about Apple Intelligence. And people were growing concerned that Apple was not moving fast enough in the AI world, the artificial intelligence world. Now, it looks like they're putting in some of this functionality. They have delayed some of that already, so that already puts some concern. And I don't know if that weighed on Buffett's outlook of how AI is factoring into that equation. But it looks like, compared to others, you could pick Microsoft as an example, that Apple is possibly falling behind. Now, you would have to tease out, what exactly do you mean when you say is falling behind? Is Microsoft really getting revenue generation from their AI products? Is the integrated features that Microsoft has pulled in from the OpenAI world, like Copilot, is that making a difference? I think it's a little bit difficult to tell at this point, but there are strong arguments that they really don't have that functionality at Apple. They're not building it in-house, and that's why they did this partnership with OpenAI as well, and they said they're going to open their platform for others. And so why didn't they build that in-house? They seemed like they could have those experts on the software side. Why, don't they have that? That's also a concern that other people are saying in the market, well, Apple is falling behind. So is that something that we should be worried about? What's the future outlook and how can they integrate that? And if they don't really own that technology, how are they going to monetize that? Who is going to control the economics? If you're vertically integrated, you control all of the economics. If you're partnering with others, you're going to have to share those economics. And who's really going to be the owner of those and who's going to dictate the terms of those? Is OpenAI going to do that? And by the way, Microsoft owns 49% of OpenAI, so they're controlling some of those economics. And so Microsoft ends up benefiting from this partnership. And others might want to compete in that market as well. And possibly if you fast forward, you could think about, well, if they still control the billion-plus space of phones installed base, they control that piece, and it's harder for people to infringe on that. And so they're going to continue to extract the economics associated with their users being loyal users. Well, that might happen, but if the functionality doesn't come through, or if it's different than what other people experience, and it's much better than on the other phones, let's say an Android phone, you might actually have people switch, which really then puts a dent in Apple's economics or their ability to extract economics from their environment because people maybe aren't as loyal, and they certainly then don't have that pricing power. So when we talk about the business, it's a fantastic business. Again, you have a very loyal customer base, and it is an enviable position for really anyone. But it does look like the innovation curve has slowed down at Apple. It looks like they're having trouble with the AI piece. And so should we be concerned? Well, it looks like now I think it is time for us to monitor. It is time for us to really think about and ask our students this fall semester as we start the semester off to say, we want you to look at Apple. We want you to really think about Apple's future. And do you think they're being innovative enough? Some counter arguments might be the M series of chips that they developed. They brought that in-house, not the fabrication, but the design of those chips. And so they got rid of Intel and they put their own chips in. And now those Macs are leading in the market as far as functionality, as far as battery life. And they have the iOS system, which, by the way, evaded this security problem with CrowdStrike, which happened recently, which is another portfolio holding for us. Oh, maybe we should be really concerned about that one. But the Apple OS system, skipped all of that. So that's a security benefit. So Apple's still innovating in the chip space, and they're a leader in that chip space even with the M series chips. And you would give them great credit for being on the edge for that tech and for being more vertically integrated by taking out Intel and putting their own chips in for very powerful Macs, which historically had to use Intel chips. at least for the past several years before that. And so you got to give Apple credit there. So that would be a counter argument that they're still leading in some areas that are hard to do. Chip design is something hard to do, and they're leading in that area, and they've made big strides in that area with performance and battery life, in particular on those laptops. They're market leaders in that area. You're having other companies come in now to try to do this. Snapdragon would be a competitor to mention that's trying to get into the Windows business with an ARM chip, as an example. Those are ARM chips, just to be clear. And so Apple's been innovative on that platform with those ARM chips and with that design. And that would be a counter argument that innovation is alive and well at Apple, and we shouldn't be quite as concerned. But I do think we should be really watching how this AI market is moving and how we're thinking about Apple with respect to how innovative they're being around that. Another counter argument to that would be that Apple tends to not be first. They were not the first with a phone, but they were first to really design a phone that people really wanted to use. So in 2007, when they launched the iPhone, it wasn't the first smartphone, not even close, but it was the first smartphone that people really wanted to use. That was designed in a way that had the operating system built in. And so I think we also have to now pay close attention. I don't think that we should be panicking about the business, even if Buffett is selling half of his stake. What should we do with our stake? I think it is time to watch, but there are good arguments for Apple losing its edge, but there are good arguments for Apple has an edge, and it continues to follow the same playbook that it has in the past, which it is not the leader. It is a second and third, but it does it better than everybody else. That is the reputation for Apple in the innovation space. And so are they going to continue to do that? We'll see. But I think it is time to pay close attention. But the business remains very strong. So if you look at the revenue, again, you're talking about huge numbers. And if you're looking at free cash flow in the last 12 months, you're talking about $100 billion. This puts them in a class really by themselves, or with very few companies that's producing that level of income. And if you look at the gross margins for Apple, 46%. This is a fabulous business. So this would be, when we're talking about rating the business, you're talking about an 8-9 type of business with gross margins at 46%, net margins at 26%, and generating $100 billion in free cash flow. That's a fabulous business that if you can own it. Now, what we're concerned about on the business side now is what's the path forward? Where's the growth going to come from? Where's the innovation that we're expecting from this tech giant? And those are the things around the business. Now, we may come back to the business now and again through the next segments here, but let's move on to the management. There's not as much to talk about on the management side here, good or bad. Mostly good. The mostly good is Tim Cook continues to deliver. We gave you the stats for the business and is really running this business well. And so are we, thinking that Tim Cook, has a good successor? That might be the concerns that we really have about the management. He's been doing a fabulous job running Apple and the management team that he has built around him for years now, since Steve Jobs passed away. People were concerned when Steve Jobs passed away. Is Tim Cook up to the job? Apple will never be the same. Well, it turns out Tim Cook was fantastic. He turned Apple into a printing press. It has made more money than ever. And again, $100 billion in free cash flow now, and still generating 26% net margins on the business. So should we be concerned really about that? I think it's another thing that we need to watch, and we need to have a good idea about how long Tim Cook might stay in that seat. This is his management team that he's built up around him. And I think it's something that it's not a concern, but it's something that we also need to watch, and something that we're going to encourage our students to think about and have a view on what the succession looks like. Now, when we move over to the valuation side of this, lots of the companies, what are in the Mag 7 that people are talking about, the Magnificent 7, and generally in the tech sector, that valuations are extended. So when we talk about Apple, what we're looking at is a forward price to earnings ratio of about 33 times. Well, that's not cheap. Historically, Apple, we're just going to pull up historic PE for Apple over time. 1 second. And so the historical valuation, this is on the higher end for Apple. So if you're looking at, over time, yes, this is going to be a peak period where you're thinking like, well, maybe Apple is over its skis at 33 times forward. Historically, you're looking at a much lower number than that. And you're really thinking about, when Buffett started buying this in 2016, you're probably at 15 times or 20 times. But, we really have to think about, okay, where's the growth coming from? And so going back to the business, if we had concerns about that, on the growth side, then we probably should be concerned about the valuation at 33 times. Maybe it should trade closer to 25 times. And all else equal, that's going to come directly out of the valuation, right? So there are two ways for the valuation. It is earnings growth and it is multiple expansion. And if you do the opposite of that, if you have earnings that shrink or stay flat, and you can have the multiple contract when people think, well, okay, it's really not going to grow in to those numbers. And so I think that's something that we should absolutely be concerned about over time. Again, but this valuation doesn't look extreme. You wouldn't say that, okay, I'm really concerned about this over time. So if you look at the median is about 21 times. And so 33 is higher than that for sure. But, if Apple continues to be innovative and it continues to have this installed base, possibly it deserves this multiple. And part of that is also when you really start to describe the business, a higher portion of the sales are coming from higher margin businesses like services than ever before. And so that continues to grow. That mix continues to grow. So you also have to think about the mix of the businesses, and the higher margin businesses are more recent for Apple. And so that 10-year average that I'm talking about at 21 times, well, really, we'd have to really deconstruct that and really think about those things. And again, that's something that we're going to be asking our students to do. Because maybe we should really be thinking about, okay, well, what's the margin that they should have right now, given the mix of businesses, and does this deserve? That's what we should be thinking about, and we really should be thinking about today and forward. None of the other stuff that's happened in the past really matters, but it's instructive to think about where Apple has come from and how the market has viewed it. But really, we got to think about today. We got to think about tomorrow. We got to think about the future. That's what matters. That's how the price gets set. So you're always thinking about what's the PE moving forward. Now, that's the valuation. So another thing I think we're going to have to check out. So this is all starting to add up that our students really have some work to do this fall semester on Apple. Again, second largest holding at the GW Investment Institute. I would say it's not a huge concern, but it is time for us to really evaluate this, really re-underwrite Apple, and make sure that we're comfortable with this stake in Apple. Now, last part of the framework is the balance sheet. For this, we get to sleep at night. Because Apple has $150 billion in cash. Really, that's a net cash position of about $50 billion because they do have debt on the balance sheet, but of about $100 billion. So you're talking about $50 billion in cash, net cash. And so that helps you sleep at night. Apple pays a dividend, not a huge dividend, but it does. And it's been growing that dividend. It's been buying a lot of shares back, and we can get into that at another episode when we talk about share buybacks. But Apple has been really responsible with the balance sheet. It continues to generate a ton of cash, as we mentioned, $100 billion in cash. It has $50 billion in cash on the balance sheet. So that's going to help you sleep at night. On the balance sheet, zero concern. If we're rating that of 1 to 10, that is a 10. No concern at all. It's not something that we should be overly concerned about. We have to watch that. It doesn't seem like they'll get irresponsible on issuing more debt, certainly ahead of their cash position at any time soon, and they haven't indicated anything that has been out in the markets, has been released, that management has really talked about, but it's something that we should monitor, not something that we should be concerned about. So let's go through the whole thing now. So we talk about the business. There are some great bright spots for the business. They continue to change the mix to have higher margin businesses, and that is on the services side. They continue to have a dominant platform that has great pricing power and great brand loyalty. That is a positive. They continue to innovate in hard spaces like chip design and using ARM chips replacing Intel chips. That is a big asset. Now, some of the countervailing forces. People are concerned that they're behind in the AI race. Well, we got to watch that. People are concerned that they're not going to grow in these markets like China and India. Something to be concerned about. And now you have Buffett selling approximately half of his stake in Apple, and maybe he knows something that we don't. Maybe it's something to be concerned about. So on the business, it's a mix. There are some really good positives that continue to be bright spots for Apple and make us really optimistic about Apple in the future. And then there's some other things that we really have to work through and understand and make sure that we're comfortable with and we have a call on. It doesn't mean maybe we'll sell all of our stake if we get really concerned about some of these things, but maybe it means we need to trim too. Who knows? Time will tell. We have to figure that out. On the management side, it's another thing where we need to monitor. Tim Cook has done a fabulous job I would rate him really highly as well. You're talking 8, 9, or 10 management team for Tim Cook, depending on how you would score it. But that is a fantastic management team that he has around him, and he has done a fabulous job. The question really is around succession. How long is he going to stay at Apple? And who do we think might be able to take over and do exactly the same type of job or even better than Tim Cook has done? That's something that we have to think about, and our students will really need to focus on. On the valuation side, that's another thing where it looks like, historically, Apple looks a little bit expensive on the PE multiple at 33 times forward versus a 21 10-year average. Is that something? We're going to have to look at the mix of those businesses. Does it deserve that? Is the growth really going to be there? Can they sustain these net margins and gross margins that we mentioned? That's something that we'll have to think about. And then you get to the balance sheet. The balance sheet, 8, 9, or 10, something that we're not worried about really at all, something to monitor, but something that, $50 billion in cash, we'll sleep really well at night knowing that Apple has all that cash. So that's the sum up. Right now, I think that puts us in a place where we really need to look at Apple. So our students are going to have some work to do in this fall semester to re-underwrite Apple. It's, again, the second largest position at the GW Investment Institute. Want to say a couple of things. I want to say thanks to the Kez family for this great studio. Really wonderful to be in here. Make sure you know that this is not investment advice. As a disclaimer, we're talking about Apple in this case as for educational purposes and for our portfolios at the Investment Institute. And I want to invite you to subscribe and make sure that you tune in for the next episode of Market News with Rodney Lake. See you next time. Disclaimer, the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guest and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.